So what is the easiest way to start trading with no money? I get asked this all the time. Obviously, it's super simple. If you had a $100,000 account, then I could just sling $5,000, double it, and then I just made another $5,000. But what if I don't have $100,000, right? What if I only have $100? What if I only have $500, $1,000, $10,000, $822.36? Whatever that number is, I totally understand it, guys. I haven't always been where I am today. Come from very humble beginnings myself. I started trading really just as a passive activity. I wanted to learn. I was swing trading, right? That means doing longer term trades. And then eventually I worked my way up to day trading. So in this video, I want to lay out a framework and a plan for you as a new trader with a small amount of money to be able to confidently become profitable without blowing up your account, right? And the goal of this video isn't going to be for you to turn your small amount of money into a massive amount of money. And if you hate that, sorry guys, I'm not the type of person who's like, hey, you can make $1 million really easily. You can, but it's gonna take some work, and it might take you 10 years to become a success overnight. Honestly, guys, that's just the way it works, unless you get lucky, and some people do, but let's just assume that you and I aren't lucky, right? We have to work hard and we have to work smart. So first and foremost, if you're a new trader, you need to understand what it is your money is, right? The money that is in your account is essentially working capital. You need to call it that because trading is a business, right? So if you think of the money in your account as working capital, it has a purpose, right? The purpose of your money is to make money. So don't look at your money as money, look at it as a money machine. The goal and the purpose of that machine is to make money, right? So if it's making money, the amount of money it can make could be 4 cents. The amount of money it makes could be $5. It could be $500. But if it's making money, the machine is working properly. If the machine is losing money, then it's not working properly. And we want our machine to work properly, right? So our number one priority, our number one goal, and our task when we turn our machine on is to make sure that it makes money and it doesn't lose money. Now you're probably saying, Forrest, this is really freaking stupid. You're speaking the obvious. No, this is not obvious, because I guarantee you that you and everybody else who's probably started trading didn't think of the money in their account as working capital. Instead, they thought of it as money. And they wanted to double that money, right? And what happens is they blow the account up and now they have no machine. They have no way to generate money because you need a machine in order to generate money, right? So you need to protect that machine at all costs. This thing that exists to make money, you can't damage it, you can't hurt it, you can't reduce its output capabilities, right? It needs to be there every single day, ready to make money. Because what will happen is that if you hurt your machine, if you damage your machine, if you make your machine smaller, is now you're not going to be focused on cranking out profits from your machine, right? You're going to be focused every single day on trying to fix your machine. And that might be where you are now, right? Maybe you had an initial amount and you're so focused, you're not even trying to make money. You have this abstract target of getting back to net zero. Shouldn't be your goal. Your goal should be first, make money and not lose money, right? So don't lose money. Your number one goal is don't lose money. Do not damage the machine. Your second goal is to be profitable on a daily or weekly basis. And so you'll notice I modified that from profitable trades because, guys, as a new trader, you will have losing trades. As an experienced trader, you will have losing trades. The difference between a newbie and an experienced trader is that we cut our losses early. We understand where we should set our stops, right? Whatever our strategy is, we make sure that our trades actually match our trading plan and our strategy, and we don't stray from it. As a new trader, you're going to have a hard time doing that, but you need to make sure that you stick to your strategy, cut your losses early, because what can happen is on a day, you might only do 3 trades on a day. Your first 2 trades are losses, right? Maybe you have a 4% loss and you have a 7% loss. And then your third trade is an 89% win. You're green on the day. Some people will look at their trade win rate and like, man, I only had 1 profitable trade. Well, then they would think I need to turn those other trades into profitable trades. No, those other 2 trades just weren't good trades. Your goal should actually be to trade less and have only ever done that 1 trade in the first place, right? So stop trying to look for more profitable trades. It's a fine goal to have, but instead focus on cutting out losing trades. Keep your winning trades and cut out your losing trades, and you'll make more money already. So I really want you to think about what I've said so far because it's huge. They seem so cliche, but I guarantee you, if you're a new trader and you're not profitable, you're not thinking in this way right now. You're thinking of your initial capital as money, which it isn't. It's a machine, right? The machine generates money. So you need to think of that as a machine. Don't damage the machine. And your goal every day should not be to fix your machine. Your goal should just be make sure your machine is humming along. And as long as I'm making money, it's doing its job. It doesn't matter if I make $5. It doesn't matter if I make $500. It doesn't matter if I make $500,000. If the machine turned out a profit on that day, it is working correctly and it's doing its job. And on the days where I do damage the machine, well, that's a problem and I need to rethink the way that I'm approaching trading. But I cannot, you absolutely cannot, as a new trader, as a small trader, every day as a new trader, your focus has to be on profitability. That's just so important because your entire mental framework changes when you focus on making money and not losing money. So that's why you need to think of that initial capital as a machine and not as money, because when you think of it as a machine and not losing money, then you don't worry about not losing money. And I know this sounds super convoluted, but trading really is a mental game, guys. It is completely mental. And the more that you understand about yourself and the way that you think and the way that traders think and the way that making and losing money will affect your psychology, the better you'll become a trader and the faster that you'll become a better trader. So those are some mental frameworks. Third is, regardless of whatever amount of money you have, you need to trade with high liquidity assets with low premium. So I'm an options trader. So premium is literally premium, right? Options have premium. And the reason I say that low premium is because you need to be able to tranche or leg into positions. So we're going to get a little bit more technical here. If I have $500, I should not be opening positions where 2 contracts cost me $200. I shouldn't be doing that, right? I need to enter positions where I can get 10, 20, 30 contracts, get in and get out, because I can scale in and scale out. I can sell half of my position, right? And I can hold the other half into more profitability. I can scale out, right? I can double my position, things like that. You don't ever want to be in a position where I have $500, can't double my position because position is 80% of my account, right? You actually are in too big of a trade already. It's completely possible, guys, and you might roll your eyes at this, but it is possible to start with a $500 account and trade it up to $25,000, get past the PDT and continue. People have done it. The reason you haven't been able to do it is because you're impatient. You want a shortcut that doesn't exist, and you need to accept the fact that you're going to have to act differently if you want different results. That's just the way that it works. You're not going to find the secret path, right? You've probably lost money over and over and over and over and over again. And because you've done that, it's taking you even longer to do what you would have done already if you were just more patient. Trading is tough. It is not easy. Some people get lucky, but we're not lucky. We got to work hard and we got to work smart. And if you do that long enough, eventually you will get lucky. But it's not because you're lucky, it's just because luck, gets passed around to everybody every once in a while. So that's the other important part. Think of your money as a machine. First and foremost, make sure you're profitable on the day. It doesn't matter how much money you make on a day. If you're a new trader, don't set daily goals. I'm telling you, it's a waste of time. Sometimes the trades that present themselves, you get a 10-point move, you get a 5-point move, you get a 30-point move. If I have a clear 100-point move, I don't want to sell my position because my daily goal is to get out after 20 points. That doesn't make sense, right? That's also bad. You want to maximize your wins, cut your losses early. Super duper important. Most people do the inverse, which, if I'm gonna say it again, you want to maximize your wins, cut your losses early, especially as a new trader. Understand what the market is presenting to you and trade the current market. Market will often show its hand. Trade the current market and be patient, right? Be patient. Buy things with cheap premium if you're trading options like me. If you're trading stocks is a whole other ballpark. I do not recommend trading penny stocks. Those are obviously cheaper, but you do need to find something that allows you to leg in and leg out. Obviously, it's your account, it's your money. Trade what you want, guys. But I can tell you, after talking to probably literally hundreds of traders at this point, just seeing the anecdotes and the examples and the P&Ls, the odds that you're different than all these people is probably zero, right? It's probably a 0% chance. And if you are, you probably wouldn't be watching this video on my channel anyways. So let's just assume that and buy things that are high liquidity, which means the spread is very low. If you don't know what that means, pause the video, Google it. So high liquidity means there's a lot of market participation. A low spread is probably because it's high liquidity and there's a ton of market participation, which means the bid and the ask are very close together, which is good. There are even things with zero spread, guys. It exists. This is important because that means when you enter a trade, you won't immediately be red or green, but preferably, you won't immediately be red on your P&L. So you can get in and get out very easily. And when you slap the ask or you slap the bid, you'll actually get filled on your contract. More importantly, you can scale in and scale out, right? So many new traders want to mimic what big traders do. And ultimately, that's kind of the genesis of this video. It's like new traders like, man, I want to do this. I saw this trader who's doing this and he did this crazy strategy. He's doing a strangle and they're doing iron condors and blah, 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 blah. Well, the reason big traders are able to do that is because their machine is much bigger. And so they can leg into things, if one side of a strangle or whatever crazy option strategy they're using, they can hedge it properly, which means they can play the other side, right? So the trade, let's say the market goes against them, they have enough capital, the machine is big enough to make another trade where they can hedge that position and then maybe address or change the underlying thesis, and then maybe the market comes back. But they can do that all with 10% of their account, whereas you have 99% of your account leveraged, so you're sweating, you're freaking out, you're typing, hey guys, should I hold this, should I sell this? And you just lose all your money out of fear. Maybe you were even right, but you're freaking out the whole time, you can't even think clearly. The only way you're gonna be able to trade like the big players is by finding things that on a percentage basis allow you to act in the same way, which means you have to buy cheaper contracts or you have to tranche in. Ultimately, the market is stacked against smaller traders. I'm gonna be upfront about that. I think the PDT rule is dumb. Don't like it. Not gonna change it in this video. So, you know, you kind of just got to deal with it. So those are my tips, guys. This really was, I wanted this to be a blunt and kind of in your face, like, here's the things that you need to consider video. I wish people would have just told me this. I spent so much time when I was a new trader wasting time trying to find those big hits. And I had a few of them, but I lost my money just as fast as I made it because I ultimately didn't have a consistent strategy that I was implementing every day. If you can't go back 2 weeks ago and look at a trade on your P&L and understand why you made that trade, which most of you probably can't because you don't have a system, you don't have a strategy. You're like, I don't know why I entered this trade. You can't just look at the chart and be like, oh, I obviously took this trade because of this. Think about that. You need to really sit down and think about why you're doing what you're doing. You know, journal your trades, scale down, think of your money as a machine, treat it like a business, right? Treat it like working capital. Focus on making money on a daily basis. Don't focus on trade win rate. And regardless of your account size, you know, you can exponentially grow your account. The last tip I will give you is do the math, open up a spreadsheet, get a calculator, take any number and multiply it by 2% every day. Or, you know, that's basically take the number, say 10, then add 2% to it, and then compound that every single day. Regardless of where you start, if you do that with 2%, 3%, 4%, whatever it is, some small percentage, don't do 5 or don't do anything over 3%. You will be amazed how quickly the money doubles, triples, quadruples, and then it does that over and over again. Trading, it really is a way to generate infinite money, but I can tell you from experience, it doesn't matter how much money you have, the market could take any amount of money, $1 million, and turn it into zero in one day. And all you need is one zero-dated options position, and you can lose any amount of money, guys. So don't do that. Don't mess it up. Play smart, manage your risk, and eventually you'll be a profitable trader. My name is Forrest. I invest in stuff. I think that you should too. Go ahead and hit the subscribe button. Check out my Discord. I do free webinars every single week, guys, minus the holidays. I would love to see you there. Ask me questions. Call me on my bullshit. I don't care. Help me build the best community out there. Ultimately, I want to be a better trader myself. So yeah, I'll see you there. Peace.